Gold just did something it hasn't done in 2 weeks. It smashed through 4140 and set a fresh 2-week high. But here's the part nobody's talking about. It broke out even though every single thing that should have crushed it is still hanging over the market. Oil at 87. Treasury yields above 4.5%. The dollar index still over 100. Those three knives are still up and gold still punched through. Stay with me, because underneath the surface, three undercurrents are quietly rewriting the second half playbook. I'm out. For the past month, gold looked dead. Pinned at 4,000, every rally smacked down, every dip bought back. A flat line that broke a lot of traders. But here's what matters. Gold tested the 4,000 line at least 4 times this month. Every single break got pulled straight back. You think that's luck? That's a wall. So who's actually buying under 4,000? Not retail. They're praying for a crash so they can buy cheap. The real buyer is the first undercurrent. OMFIF's July report surveyed 74 central banks managing over $10 trillion. 82% now hold gold, up from 71 a year ago. Nearly a third plan to add more. And 61% expect gold between 5 and 6,000 by June 2027. That's 20 to 45% above where we are right now. Goldman tracked physical London vault flows and quietly raised its central bank buying estimate to 60 tons a month, over 700 tons a year. China's central bank has added for 20 straight months. The World Gold Council says a drop below 3,700 just triggers more dip buying. Only 28% think a high price kills their appetite, meaning 72% are perfectly fine buying at today's level. That floor isn't luck, it's nation-level buying you and I can't imagine. Undercurrent 2 is the most counterintuitive. Remember the man who helped knock gold from 5,600 to 4,000? Powell. At his July testimony, he declared regime change, called the 2020 framework a policy error, and promised the past 5 years of inflation would be history. Same morning, 90 minutes earlier, CPI crashed to 3.5%, monthly, negative 0.4. Prices actually fell. Your trained reflex says, no hike, weaker dollar, gold rockets. So Powell should have been gold bullish. Instead, he killed it in 11 words. That's just one data point. I'm not buying it. Here's the tell. If he were a real hawk, a falling CPI would terrify him, because it weakens the case to hike. But he didn't flinch. He's not preparing to hike. He's performing the ability to hike. Verbal tightening. Talk hawkish. Let the market tighten itself. Hands stay still. A week later, CME FedWatch put the odds of a July 28th hold at 85.6%. The weapon that buried gold for 6 months, Powell will hike, is leaking air. And every point it drops, the shorts get nervous. Today's spike? Part of it is shorts fleeing early. Undercurrent 3 is the deepest, and the one that should chill you. For 5 months, your reflex has been Middle East war, oil up, inflation, Fed hikes, dollar up, gold dies. That chain worked perfectly. It took gold down $1,600. Look at today. Oil at 87 yields above 4.5, dollar over 100. Every old logic suppressor still there. And gold rose anyway. Gold, silver, oil, all up together. Old logic says they can't go the same way. Why? Because the market is switching to a new underlying assumption. The Fed is trapped. U.S. federal debt is near $40 trillion. Interest expense just hit an annualized $1.2 trillion, more than the entire defense budget. Each hike adds tens of billions. Meanwhile, the real economy is cracking. June payrolls a weak 57,000, Michigan confidence below 50, gasoline demand negative. Trapped between $40 trillion in debt and a collapsing real economy, Powell can only talk. And when the Fed can't hike but inflation won't fall, that's the prelude to stagflation. In the 1970s, gold went from 35 to 850. 24 times. Stagflation is gold's best environment in financial history, bar none. So what lit today's fuse? Not just technical buying, a headline. July 21st, Xinhua reported Qatar, Egypt, and Pakistan offered the US and Iran a 10-day ceasefire. The key phrase, the Trump administration is studying the possibility. In Middle East diplomacy, that means we didn't say no. This from a president who spent a month pushing war, voiding deals, threatening to erase Iran. The tone shift matters more than any data point. Rubio echoed it, open to a diplomatic solution. 2 signals, same day. One toward war, one toward peace. The market, always the smartest room, chose to believe peace. Because nobody can survive the status quo. Hormuz closed in the east. The Houthis now blocking the Bab el-Mandeb in the west. Saudi squeezed from both sides, global oil supply down as much as 7%. If a ceasefire even temporarily holds, oil falls, inflation eases, the biggest rock on gold lifts. And gold won't need a new bullish story. Just the old bearish ones removed. Here's the beautiful part. Peace or war, gold's 2 roads converge. Peace. The bearish case evaporates, gold rebounds. War. Stagflation accelerates, gold reprices. Either way, up. Today's candle is the market realizing that convergence for the first time. 4 nodes to dead watch. 1. This Thursday, July 24th, US PMIs. If they shrink, Powell holds, the floor hardens. 2. July 28th to 29th, FOMC. If Powell holds, that's the 5th straight hold. The Powell will hike story is dead. Short covering turns from a trickle into a stampede. Gold could test 43, even 4,400. 3. Every update on that 10-day ceasefire. 4. The debt interest bomb, 1.2 trillion a year. A self-accelerating spiral, Dalio already warned, is fiscally unsustainable. When global investors finally ask, are my treasuries and dollars still safe? The answer they land on is gold. That's why 61% of central banks are waiting at 5 to 6,000. The past month ground a lot of people down. But while you were watching the flatline, a group managing $10 trillion was quietly moving gold into their vaults, ton by ton. They're not looking at the chart on your phone. They're looking at a $40 trillion debt black hole and the cracks in the dollar system. When 4,000 got tested 4 times and wouldn't break. When 82% of the world's central banks are walking the same direction, standing across from them might not be the smart trade. I'm Alex. Hit subscribe, and I'll see you at the next print.